So is a decline in earnings quality, especially when it comes to tech, partly to blame for this sell-off? Joining me now is Bob Shea, CEO and Chief Investment Officer of TrimTabs Asset Management. Bob, always hard to know what to make of moves like this when the market's been running so hot for so long, but how concerned should we be, particularly given the earnings season we've just been through?
Yeah, thank you, John. I appreciate it. I don't think we're terribly concerned about this. I think, we were due for a correction, and, I think folks have been hyper-focused on inflation, even though the Fed kind of telegraphed this, last year in the August Powell speech and into the September policy decision where they were really focused on maximizing employment. But with regards to, earnings were a blowout, as you know, and particularly on the big mega cap tech names. We at TrimTabs, we focus on, we manage a suite of free cash flow investment strategies, focusing on free cash flow, profitability, and quality of earnings. And for the big mega cap tech stocks, they blew their numbers out. Earnings were fantastic. Cash flow growth was decent. However, a minor red flag or a red flag for us was a build in accruals, particularly for companies like Facebook, Amazon, and Tesla. Yeah. And for us, that just draws into question the sustainability of that.
How much, though, do you think the whole market can rely on those strong big tech earnings? We came into 2021 with some people concerned about the amount of the S&P, for example, that's made up of exactly those names. And meantime, we had some of these other more speculative and hopeful names run up strong the beginning of the year. Now they've fallen off. I mean, maybe their earnings numbers not quite as strong and wholesome as those big tech ones, right?
Yeah, I think so. And look, they've dominated from earnings for some time, as well as the percentage of the market cap. There was definitely, I think part of this, if you go back to the GameStop and meme frenzy taking down short interest in a lot of the tech and speculative names, hedging activity has been non-existent. Archegos, I think, might have had prime brokers pull in leverage, and particularly some hedge fund darlings, might have been having to sell some of these names. So I think there's just a confluence of reasons for the the selling today and the last several days. Inflation expectations, even though nominal rates are just pushing back up to where we were several weeks ago at 170.
Shepard Smith here. Thanks for watching CNBC on YouTube.